Luvleen, many thanks for joining us here today. Wonderful to see you.
Thank you. Thank you so much for having me.
Our pleasure, our pleasure. So this fits very much with our theme for the day, which is exploring what's coming next, innovation in the space, the relationship between fintechs and traditional banks, and how that is evolving, and some of the opportunities in that space as well. So you're a great person to have on the show talking about that. So let's maybe kick things off just with a question to get some context really on BM Technologies, the journey that you folks have been on, and how you differentiate from other digital banking platforms.
Sure. So we are BM Technologies, and we are one of the largest digital banking platforms and banking as a service providers in the country today. As was shared, we have over 2 million account holders today, and really we pursue a strategy of B2B2C and banking as a service. And those strategies really enable us to be able to acquire customers at high volume and at low cost. And so today we're able to acquire customers at less than $10, and in an industry where traditional banks are spending way more than that, and then challenger banks, hundreds of millions of dollars a year in marketing, that is a huge competitive edge. And so our business is really in higher education as well as banking as a service, and enabling others and non-banks to enter into the banking space. And so happy to talk more about that as the questions proceed.
Yeah, well, let's maybe dig into that banking as a service model first of all. I guess kind of what prompted that shift, what was involved, how did you set up, how did you embrace that concept?
Yeah, when we first launched, we were actually kind of following the footsteps of Bank Simple at the time, which was completely digital, bought by BBVA later, and a lot of the chimes and barrows of the world, I think, were really inspired by what Simple started years ago, and I think they were a little too early to the game. But what we found out about 6.5, 7 years ago when we started was that a direct-to-consumer strategy was very expensive for customer acquisition. And that unless you're VC funded with a lot of dollars coming in, it's very difficult to create a profitable model and to do that fast. And we were focused on how do you create a sustainable, profitable model. And so about a year and a half into our existence, so back in 2016, we pivoted and we thought about how could we do this high volume acquisition of bank customers at low cost. And so we found unique and innovative ways to do that, which have transpired over time into what banking as a service is called today, you could say. So we had built out our digital banking platform, which was API enabled to start with. And so with that modern technology stack that's also sort of cloud native and scalable and repeatable, we had the components to actually enable non-banks, so big brands that want to continue to have more stronger relationships with customers. Like one of our customers is T-Mobile, and we've launched the T-Mobile Money checking account for them. That is what our API-driven digital banking platform allows for. And couple that technology that we offer with our banking operations experience to support these banking programs as well. We're very uniquely positioned in the market.
Yeah, it's a fascinating journey, and I think it really speaks to this idea of how the fintech community is really led to an explosion in financial services in adjacent industries, things that aren't necessarily traditional banking organizations. You mentioned T-Mobile, but there are plenty of others. How are you partnering with those organizations in order to, I guess, really diversify the offerings in terms of financial services in the market?
Yeah, I think what's unique about banking as a service in these larger brands sort of offering these digital banking platforms is that you have to look at their specific business and what is their relationship with their customers, what is their competitive edge, how can you create synergies between the bank account, checking, savings, and these lending products or whatever they want to build out. How does that connect to their overall business and customer relationships? And when you create synergies between their core business and the financial services that they're offering, which is different company to company, a Walgreens will be different from an Uber, will be different from a T-Mobile. That really is what dictates the offering and the differentiation between them.
Yeah, so what kind of differentiation are you seeing between those different customers, your customers as opposed to the end consumers?
So I can speak for T-Mobile since that is our customer. And for T-Mobile, they're a public company, so I'm only going to share what is public. But their offering was really about, hey, we disrupt the wireless space. The wireless space really extends into anything that you do on your mobile device. And we've built trust over time within our brand. And we believe that we can play in the space of financial services. And we are already playing in the space of financial services because we do billions of dollars a year in device financing. And so adding a checking account, a savings account over time, other lending products really fits well into their ecosystem, their overall narrative and customer relationship experience. And now as we build sort of stronger relationships to the core business, whether that is better pricing if you're a T-Mobile customer versus a non-T-Mobile, better perks if you are a more tenured T-Mobile customer, being able to get $5 off of your monthly statement if you pay with your T-Mobile debit card your monthly bill. And then overall, just a very attractive standalone account, which today has interest of 4% on balances up to $3,000, for example, $50 fee overdraft protection. And these sorts of things that T-Mobile was willing to invest in because the customer lifetime value of the wireless customer and the stickiness there outweighs the cost of developing these unique differentiating factors on the bank account.
Yeah, fascinating stuff. Really putting that customer-centric view and the understanding that organization already has about its customers to work. Let's maybe talk a little bit about the partnership you have with Google. I know you're one of the 11 financial institutions that are working with Google on its Plex accounts. So talk to us a little bit about that partnership, how that unfolded, what it offers, and if there are any kind of challenges there with working with such a big firm such as Google.
So Google actually wound down that program in August. I think that, us sort of talking about what is the next frontier of fintech and who are the players that are going to play in it, I think that there's this huge assumption that large tech players will play a big part in it. And they already are. I mean, Amazon has an ecosystem of financial services. Obviously, we've been hearing about Facebook and their desire to get into crypto and other forms of payments, et cetera. Google had their own sort of vision of what they wanted to create with Google Plex. And if you read some articles, et cetera, I think change in leadership, et cetera, whatever their reasons are, they actually wound down that program. But I don't think it's a reflection of whether big tech can be successful or not in financial services. And I do think that being able to leverage the fact that they have millions of users using Google Pay today and really can replicate a super app sort of concept, which PayPal has been talking a lot about and is very bullish on, can still work, but maybe the execution, the thought, and the leadership around it at the time for Google just didn't work out for them.
Yeah, sure. I mean, we heard a lot in that last session about regulation and the challenges around regulation in the fintech space. How does that play into this concept of big tech getting involved in the fintech space?
I think that banking as a service has been enabled because it is not an easy landscape to navigate. I think that being a bank and offering banking services has hurdles to it, being a regulated industry. And I think it should. So I'm not making a proclamation that that's wrong. It's in place for a reason and for consumer protection, for et cetera, many different reasons. But it enables the whole business of banking as a service because there are experts that have been able to enhance the banking experience through technology and either partner with or also own and understand the knowledge that it takes to run a bank as well. And so you can package that together and actually allow and enable, whether it's big tech, whether it is a retailer, whether it's a grocer, whether it's a pharmacy, whether it's a ride-sharing app, to be able to embed these services within their ecosystems, which makes so much sense because they already have sticky relationship, millions, if not billions of customers, lots of data, and can provide a really unique, compelling customer experience for their customers around financial services. So I hope that was a helpful answer.
Yeah, absolutely. Well, I know that you had your BM Technology had its roots in the traditional banking world. I think it was developed as part of something by Customers Bancorp. So I guess kind of how did that experience shape the way you think as a fintech?
I think it very much shapes it. We are a group of technologists that also are bankers, and I think that uniquely positions us. I think it's to the fintechs that want to become banks, it's not an easy task. But if you truly understand the regulatory landscape, and banking is in our DNA, we were a bank for 6.5 years and happened to not be when we went public earlier this year for the last 10 months. And so, number one, I think operating within the bank charter structure pays off dividends if you know how to do it and know how to do it well and know how to do it with a risk mitigation mindset. And so if you heard the news, we did actually announce a strategic merger with First Sound Bank in November. So we are on our path to becoming a chartered institution and really combining the best of fintech with the best of a chartered institution. So we didn't want to, we missed Customers Bank too much. We wanted to go do it again.
Yeah, well, I want to kind of talk to you a little bit about that, that relationship between traditional banks and the fintech community, how that works, how to get the most out of that opportunity. Because it is an opportunity. I know that a lot of people talk about fintechs being a threat, stealing bankers' lunches, etc. But there's a real opportunity there to do things differently, to think in new ways, to bring innovation to market. So what's the kind of what are your tips for getting the most out of that opportunity?
I think it's a very synergistic relationship, because if you're offering banking services as a fintech, you either need to get your own charter or you're going to have to partner with a bank. So, we've been partnering with a bank this year, and we made the call that it was better for our future in creating a sustainable, profitable business model and a better customer experience, and over time expanding our financials and having more autonomy over it, to have our own charter. But that being said, for those that want a pure play, stay a tech company, you need to find the right bank partner to support you for those products and services and the piping that requires the bank behind it. And I think that, what is the advice? I think that we're getting better at it. I think that there's more fintech forward banks and there's more sponsor banks, and you hear about, it just used to be sort of Bancorp Bank. Now you're hearing about MVB, Cross River, CFSB, Sutton. The list is sort of growing. And so I think that it's going to be interesting, because right now it's synergistic, but I do see a point where friction might develop where, banks might vertically integrate. Why can't they build out that technology that the banking as a service providers, if they're savvy enough, if they're innovative enough, which I think some of these smaller fintech forward banks possibly are. And so I think there's a lot of room for partnership, but I wouldn't be surprised if there's some competition over the next 3 years as the space gets crowded.
Yeah, really interesting. Well, we can maybe dig into that a little bit further in just a moment. I'd maybe like to talk a little bit now about, I guess, that journey that you took from being part of a traditional bank to being a fintech to now to kind of partnering again with the traditional banking sector. And I guess the challenges on that journey and how you overcame those, because there'll be a lot of folks on the call here today who are within traditional banks, who are potentially looking to develop their own innovative services, digital banking and challenger banking ways of working. So what challenges did you face, and how did you overcome those?
Well, I think, I think what's positive and encouraging for banks that want to become more fintech forward is we were born within Customers Bank, which at the time was under 10 billion in assets, community bank based in Pennsylvania, very commercial oriented small business bank, but they had a visionary management. And so the idea of BankMobile intrigued them, and they're willing to incubate that. And we were incubated within Customers Bank and grew within them for 6.5 years. And so it is possible to build and invest and create the type of technology and business that we have within a bank, because we did it. And I think what it entails is sort of a separate, firstly, it's a conviction and a strategic priority for the management that this is something they want to do. Number two, to allocate, the funding to invest in the technology and retain some talent that can help sort of supplement the current sort of banking talent in the organization with some more technology forward players as well, and really isolate that group, like work in tandem with them, but let them grow and develop this sort of as a side project. And that's what we did. And so the story, if you view what we're created and what we're doing today as successful, it was born within a community bank. And so it very much is possible.
Yeah, I know that a lot of one of the challenges that a lot of the folks here face is this idea of how you grow that initial idea, how you get the buy-in for it, and then how you scale up from that initial project to something more tangible. So I guess what was your approach there, and how did you tackle that?
I mean, I think customer acquisition is so important. Having a very strong and clear customer acquisition strategy. You can have the best technology, but if you don't have a customer acquisition strategy that's solid, it really doesn't matter. And so I think that, we did get the buy-in from Customers Bank, and we were able to incubate and start building out what we were calling BankMobile at the time. But within our first year and a half, we found out that the direct-to-consumer strategy, as I said before, the CAC was very high. We were seeing fraud in the accounts. There were small balance, sort of unprofitable accounts. And at that moment in time, we had a decision to make. Are we going to, shut this down, or are we going to pivot to and figure out a model that is more sustainable and scalable? And that is where the banking as a service and the B2B2C strategy that we do in our higher ed business, which I haven't talked much about, came to life. Like, we had to be innovative and pivot and think. So I think that you don't always have the answer on day one, but you can have a good vision, and then you test, try, and pivot if needed. But the end goal is, how do you get high volume acquisition at low cost and really create something differentiated in the market?
Yeah, great. Thanks, Luvleen. Well, let's touch a little bit on this kind of high-end part of the business that you touched upon there. Talk to us more about that.
The what part of the market, sorry?
This high-end end of the market that you were just talking about there, that you haven't touched upon yet.
Oh, the higher ed. So our higher ed business, so I said that we pursue a B2B2C strategy and a banking as a service strategy. Our B2B2C strategy is in essence a direct-to-consumer strategy, but through a B2B channel. So it's a more efficient customer acquisition cost. So we do that in higher ed today. We solve a pain point for colleges and universities around the country. What that pain point is that they disperse billions of dollars a year in financial aid refunds. We help take over the headache of that. They pay us a recurring annual subscription fee, really at a fraction of the cost that we're alleviating the burden from them. And we get to ask these students that are receiving these funds, do they want to ACH an existing bank account, or do they want to open a very compelling, competitively positioned, student-focused BankMobile checking account? And so through that business today, we're opening several 100,000 accounts and $2 billion plus in deposits flowing in each year from that business into our accounts. So that's the sort of innovation, the pivoting, sort of thinking, about unique ways to be able to support customer acquisition and build scalability and sustainability.
Yeah, we've talked a lot this week about how banks can I guess, encourage or nurture that culture of innovation, new ways of thinking, more agile working methodologies in their own organisations. What can banks learn from the fintech community in terms of how to do that, how to encourage that innovative way of thinking, and given all the regulations that they are under?
I think that there's banks showing the way here. So there is a niche of banks that are sort of fintech high growth banks, and that are investing in payment strategies and banking as a service providers. And so there's a roadmap to do this, and there's examples of banks that are doing it today. So I wouldn't go under the guise that the regulatory sort of environment is too much of a hurdle. I think that as long as you have a risk mitigation mindset in whatever you're pursuing, there's always a path forward. So I would say, looking at what Lending Club has done, what Axos Banks, Silvergate, MVB, Cross River, Green Dot. So I think that there's several models for the community listening or the audience listening to sort of look to.
Yeah.
And our parent company, Customers Bank, I mean, they're doing very, very well.
Yeah, absolutely. I think what struck me in the last session was actually the sheer diversity of types of offering in this space. You know, everything from crypto to personal banking to insurance to peer-to-peer lending. There's so many different types of fintech organizations out there. So it strikes me that there is lots of niches in which to play.
Yep. Yep, absolutely. And you don't have to reinvent the wheel and offer it all yourself. There's, to the point where you said, is there a synergy between banks and fintechs? Yeah. I mean, when we talk about building out our digital banking platform over time, which, we think the pillars of that, at least now, is, banking, lending, advice, investing, insurance, crypto. We don't need to go out and build this whole ecosystem. There's many compelling partners out there that are uniquely positioned and do this very well, one single segment of what I just said. And so, I think there's a huge opportunity to partner with fintechs and really build out these capabilities of products and features that are really compelling, and really this rebundling of financial services, and really becoming that sort of one ecosystem that customers can go to and have the best sort of banking experience.
Lovely. Now, I want to talk to you a little bit about the pace of change and all the disruption that we've seen over the last couple of years. How has this impacted on approaches to innovation and the speed of innovation and changes in this fintech market that you've seen? What's been the biggest impact for you?
Fintech is moving very, very fast. You got to stay on your toes and kind of know what is going on, and making sure that you're sort of seeing the new innovations out there, and making sure that you maintain a competitive edge, a niche focus, because that's going to become more and more important. And when banking as a service, in the last 18 months, like, it's become the buzzword in sort of the industry. I mean, when we were signing our contract with T-Mobile back in 2017, I mean, there was no name for this. I mean, it's the landscape has changed tremendously. And I think that that's really good in the sense that technology will improve, pricing will improve, innovation has to improve because you're being forced to innovate and think on your toes. But I think that it creates an opportunity for this vertical integration, like the step that we are taking to become a bank, because I think those that have the benefits of the charter with the technology that really can support the innovation that the market is seeing is going to be a huge competitive edge going forward. And not everyone can become a bank. So I think, we're always talking about, oh, the regulations and what we cannot do because we're a bank. Like, it's the opposite. Look at how well positioned we are and what a charter offers. As long as you're able to navigate that and have strong regulatory relationships and do things in a thoughtful, methodical approach. But I think it offers a huge strategic advantage.
Yeah, absolutely. As you mentioned, this is a competitive space. So what have been the key learnings for you as you've been on this journey, taking the company public, I guess introducing this new model, working with these new partners? What have been the key learnings for you?
Key learnings. So I'd say key learnings are, number one is, have a very strong customer acquisition strategy. That's always been number one in our head. And for if you want a profitable, sustainable model and you're not VC backed with unlimited amounts of capital. And I think number two is partnerships are really a way forward. There's no pressure to reinvent the wheel, and I think it's a waste of time and a waste of money. And if you can structure partnerships in a revenue generation win-win way, they really help you bring to market innovation much more quickly. And I think that that's a huge thing that we've leveraged and done over time. And three is really recruiting the right talent and having a narrative, a vision of where you're going, a story about growth, and something that people get inspired by and motivated by, because you want to attract the right talent if you want to go from A to B and build something extraordinary.
Well, let's maybe just talk quickly a little bit about talent, because I think it's a really important topic, and it's one here that has come up in conversations that we've had over the last couple of days. This idea of the war for talent, and actually banks' ability to compete with big tech, with the fintech community as well, for these new digital skills that are coming out. They're a real kind of commodity, they're a scarce resource and valuable as such. So how are you approaching that? How are you winning the war for talent?
I mean, it's hard. And I think, with inflation, et cetera, and we're recruiting for a few positions, and it's extraordinary what the asks are for salary. I'm like, where did this come from? What's happening? So I'm not going to sugarcoat it. I think it's an interesting time, and people have seen a lot of attrition, and it's also because we went through COVID, and it's a lot of introspection where people are also deeply thinking about what they want to do and how they want to spend their time, and it's just made the market all the more tight. And so I think, what can you do? One is, don't overpay for talent unless they're worth it. So I mean, don't try to recruit them at all expense. But it's about what I said before, which is, what is your vision? What are you trying to create? Because you have to sell something to someone based on meaning and impact, because dollars can only go so far. And you want people that are buying into that, because they're going to work a lot harder and a lot smarter and be invested a lot more. So, I mean, our competitive edge is telling the story. What are we building, and do they buy into that? Are they excited about that? Are they motivated by that? And is other people in the organizations that they talk to passionate about what you're building and learning, because that's contagious. So honestly, it's a human, for me, it comes down to the human part of it and what we're trying to build.
Yeah, really interesting. In one sense, you mentioned there that the COVID has tightened the labour market, perhaps, in the sense that people are maybe hunkering down and looking to consolidate where they are right now. Has it also opened up the labour market in terms of access to new talent pools? Whereas before, perhaps all the digital talent was maybe located in certain metropolitan areas, the Bay Area, New York, etc. Now you've got these regional areas that are open for talent as well. So are you seeing that? Are you seeing actually a diversified talent pool?
Absolutely. Absolutely. Our CTO works out of Florida most of the time. My head of marketing is in the Bay Area. My head of BD was in Seattle for the last 6 months. So I think that from a recruiting standpoint, we no longer look at geography. It's really expansive, and that also makes it, a stronger pool for us as those looking for talent, that we have more to choose from. So yeah, I think that's the silver lining in it.
Yeah, absolutely. And I guess on that note, D&I is really important for talent acquisition as well. This idea of diversity and inclusion, and actually getting multiple voices, diversity of voice and thought in there. Why is this key to the innovation process for you?
I mean, I think that we've all sort of heard and read articles and seen studies that diversity in all angles, whether that's race, gender, thought, is always amplifies sort of the end product. And so I think that those that actually implement that in their businesses, they see the proof in the pudding themselves. And so I don't think it's something new. I think it's all something we're adopting and learning and accepting and trying very, very hard to incorporate into our businesses. When we first started BM Technologies, I mean, I was 28 years old at the time, and it was this great combination of sort of technology and a millennial sort of mindset, and understanding what we were trying to build and who we were trying to build it for, with a strong balance of like banking veterans as well, that really understood the landscape in which we were operating, and to make sure we were adhering to it in a safe and compliant way. And so I think that, being able to extend that beyond just age and gender and thought and geographies, I think that, we're going to see much better products and more innovation.
Yeah, really interesting. Well, Luvleen, what's next for you over at BM Technologies? What's kind of on your horizon? What are you focusing on as we head into 2022? And where do you see the most interesting trends and developments?
So for us, we are committed to becoming a true fintech bank, and so going through the regulatory process and really combining our business model with a charter and really following in the footsteps of who I believe to be innovative fintechs like Lending Club, like SoFi, like Borrow, et cetera, that have really combined these two models together. And so that is our number one priority, and in creating a fintech bank of the future, really combining the best of a banking as a service provider with a marketplace lender, with a robo advisor, and personal investing. And where does the future sort of hold? I think it's really this, being able to continue to innovate in the spaces that we're in, and to build out our digital banking platform in those pillars and areas that I spoke to you about, and then developing that asset generation strategy where you really have both sides of the balance sheet, where not only it's expansive to the economics, but also provides a more breadth of cross-selling opportunities and a broader breadth of products to offer and attract new customers and engage with them better.
Yeah, great. And what about the wider industry, Luvleen? What do you see as kind of the most important trends or developments or exciting technologies coming out, or customer behavioral change? What are the kind of the things to watch out for as we head into 2022?
Well, when we first launched BankMobile, I'd say 7 years ago, there was this huge unbundling, and everyone wanted to be really good at either personal loans or personal investing or student loans, et cetera. And now this sort of rebundling is happening. So I think this desire to create this digital banking platform and to allow others to be part of that ecosystem. So it's not like you own every product on there, but you're rebundling with your products plus others to create that ecosystem where the customer doesn't have to keep going out and finding the best of this for that niche and the best player for that niche, and really just bringing it together and building that convenience within one umbrella is going to be big. I think that we're going to continue to see banking as a service grow. As I said, when we launched T-Mobile, we were one of the first, but since then, Walgreens has launched a bank account, and we're seeing others. Verizon, a family account, and so others are starting to get into the cycle. Walmart has taken a deeper dive into it. And so I think we're going to continue to see a growing trend of large brands that want to create new revenue streams, more engagement, more loyalty, more seamless experience, more access to data, et cetera, are going to be participating in that. So I think that will be a big trend going forward. And I think, consumers sort of desire to be able to get involved in crypto, whether that's earning rewards, earning interest, buying or selling, and being able to utilize blockchain payment for facilitating payments, at least on the small business realm. I think that their use case for consumer is still being figured out, but these are some trends that I think will be taking place in the next 12 months.
Yeah, wonderful stuff. Luvleen, many thanks for sharing your thoughts. Wonderful to hear your journey. Best of luck with that in 2022 and beyond. And we hope to see you back here at the summit again soon.
Thank you. Thank you.